Good evening, everybody. Let's get going. So welcome to this evening's AUDJPY Securities webinar, Forex Trading Live Market Analysis. My name is Duncan Cooper. If you're on a YouTube live stream, I can't see the chat, but you're more than welcome to join us in the webinar. I'll give you the link. Other than that, you can watch the webinar, but I just can't answer your chat. All right, before we get into it, if you can read through the rich disclaimer. And any questions, just type them into the question and answer box or the chat. It's got both open. All right, let's move along. If you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at AUDJPY Securities. I'm a full-time trader. I've been trading for more than 15 years and been mentoring clients for more than 10. If you want to contact me about the webinars, you can just shoot me an email to duncan.cooper@audy.com. And I'll endeavor to get back to you in the 24 hours. All right, through the week, you can connect with me at our website, audy.com Market News tab. Find my analysis there on our YouTube channel, AUDJPY Securities Australia. And if you want to connect with me personally, those are my Twitter and LinkedIn handles. You can just connect with me. And most of the things that I deliver on a Forex analysis basis gets put through those handles as well. All right, if you want to connect with you as well through Telegram, then the AUDJPY Securities Telegram channel, just contact Nathan Bray. I'm providing analysis in there as well. And if you want to get access to my chart layouts, templates, and indicators, then contact Nathan as well. So I'll give you his details in the chat right now. He's on a bit of leave at the moment, so somebody is monitoring his email. Somebody should get back to you, but there's always a possibility. There might be a fraction of a delay there, but we will get back to you. All right, just putting that in the chat. There we go. So let's get into tonight's charts. All right, first up, we'll just have a quick look at what is coming out on the news for the next couple of days. Let me just refresh this page. It's not updating. Need to click that thing there, probably. Used to update, but at the moment doesn't seem to want to update for me. All right, so the item for the day, we've got the Canadian CPI data coming out at 10:30 p.m. But the more important item over the next day and a half, 4 o'clock in the morning on Thursday, we've got the US interest rate decision, 4:30. Then we've got the press conference. So expecting 75 base point rise. And, you know, market might be factoring the possibility of a 1% rise, but we will have to wait and see. And the market will definitely be looking at what does the Fed say at 4:30. So 0.75%, 75 base point rise is probably more than factored in. The market will be looking to see whether the tone of the FOMC press conference is hawkish or dovish. And that will probably be the more underlying factor. We had a very heavy sell-off versus the US dollar. Well, the US dollar strengthened heavily, compared to the US dollar heavily sold off after the better core CPI data last week. So the market is trying to maybe just pull back some of that as well. So let's have a look around. Personally, I'm not going to be opening. I don't tend to trade too much real short intraday. I tend to trade from one day to the next, holding a position 1 or 2 days. So I probably won't be entering until we'll get past this event because I'm not quite sure what's going to happen on the chart. So having said that, I'm going to go through the levels I'm watching that I'm planning around for the week. So let's get to the charts and I'll just have a quick look at what is going on. A couple of pairs, depending on what you want to do. There's a bit of 4-hour retracements going on a couple of pairs. I'll just touch base on the Aussie Dollar first of all. If you turn it to the 4-hour chart here, excuse me one moment. We've moved down. In fact, I'll go to the day first and then we'll go to the 4-hour. We're down at monthly support here. Last 2 trading days, we've been having positive days, rejecting down there. Are we going to hold here long term? Are we just holding until past the press conference, FOMC press conference on Thursday morning? We'll have to wait and see. But on the 4-hour chart, we're starting to form an uptrend. We're just having a pullback, and we're pulling back to the 62% level and the 6,700 level. So there's a possibility there that we're just retracing to the 62, getting support at the figure as well, and then we're moving back up to put in the next upward move on that 4-hour structure. So the upward move on the 4-hour structure would be coming up to the 127 extension. This 67, 61 levels daily resistance from over here. So there's a possibility that the 4-hour chart there is just had a pullback and he's wanting to put in another upward move from the 62% level in the figure. And it looks a little bit similar on the euro dollar. Here's this 4-hour consolidation that's moving into an uptrend. We're pulling back to the 62 here. Fraction short, pip too short, and it's pretty much getting support at parity. So market's starting to want to move above parity as we're waiting for the interest rate decision on the euro dollar. I know the high time frame trends are down weekly, monthly, but the daily's starting to show some support in between 99.52. Let's just go to the daily. In between 99.52, which is weekly support over here, and the figure, we're starting to get support in there. There's divergence here, positive divergence to price action. We've got a higher bottom forming on the day chart. The 4-hour chart is starting to show an upward trend here. And we're just been having a dip in early London to that 62% level. So there's a look about this pair that doesn't want to go down below parity for too long. Is it giving us a telltale sign about what's coming for the week? Are we going to be moving up for these pairs to the US dollar? The Aussie dollar is showing a bit of support. The euro dollar is showing a bit of support there. Of course, things can change, but just showing some support. So we've almost pulled back to the 62, is at 99.98, but we have come down to the figure there. So that area there could be support intraday for a higher move up intraday today. All right, let me just click through a few other pairs before maybe just running through the dollar index first of all. All right, I'm going to go to the dollar index. So let's have a look at the dollar index on the monthly chart. And the monthly trend is up. Nobody's, well, I'm not arguing the toss about that. What I am seeing, just zooming it out so I can take in all these years back to 2000. Just checking the date there. Back to July 2001, I think it is. We're major high, down to major low, drawn a fib, and we're at the 79%. We're just failing at the 79%. We're in between two resistance levels, 109.24 and 111.31 up here. Now we've had countless months up. As I've been saying, this is quite overextended. I could even draw a fib across this move here. So that move up, and we pull back. This is way beyond now the 127 extension. So this has to be getting into the latter end of the move at some point for a pullback. It doesn't necessarily mean it's going to change the trend of the monthly chart. 1 or 2 months down doesn't change the trend. It just means that we have a corrective move. Might change the weekly trend and the day trend, but we're definitely overextended, and we're at a key area there, 79% retracement of a lot larger range. So is this an area in time where we're going to start to have a bit of a change, a bit of a pullback? Weekly, down week last week in terms of price, but we finished positive. Haven't quite taken out last week's high. See how last week's high held at the 79. This week's high at the moment is fraction short. So that trend is still up on the weekly there at the moment. Daily, potentially here we're forming a lower top. We have current trading day is taking out the low of yesterday, Friday, and maybe Thursday. So after Tuesday's big day up, it hasn't really gone anywhere too much. All right, so potentially it could be putting a lower top, MACD showing negative divergence. So this could be having more of a corrective movement down. We'll just have to wait and see what the week brings. So just bear in mind the position of the dollar index and what that is doing as you're looking at the other pairs. S&P 500 yesterday did have a positive day up. Now I've got this fib drawn structurally across this weekly uptrend. I know we had a nasty candle last week. So the monthly trend is down and the weekly trend is up. So can the weekly trend hold and put in another movement up here? Or have things changed and we're actually moving down in line with the monthly trend? So at the moment, we've pulled back to the 79% level of that weekly move up. Are we getting support here to put in another movement up? We had a nasty week last week because of the better than expected CPI data. So it'll be interesting to see what today brings. Do we start to move back above this area? This is weekly support or resistance here. Can we move back above that level? Have we got support at 79 to move back above the 62 and that weekly support resistance area through here? So we'll wait and see. You know, if that dollar index moves down, this will potentially move up, or vice versa. If this moves up, the dollar index will move down. We'll just have to wait and see. So just look at these structural patterns of the S&P 500 and the dollar index. That will give you a little bit of a clue about maybe what's happening with the pairs. All right, so there's a little bit of a holding pattern at the moment with the FOMC statement coming out, but let's go through the pairs. Aussie Yen, today chart. Potentially, but I'm going to go to my other charts for this pair. Excuse me one moment. Cameron, you're asking me, do I trade the S&P or use it more as a gauge? Occasionally, I will trade the S&P. I tend to trade the S&P if we're having a strong decline. If we're looking like a crash sort of situation, I will trade the S&P. But day to day, I don't, because I have to pay interest. There's interest on it, plus you have to pay dividends. So I don't like to hold it too long because you end up paying a whole bunch of costs. So if it's crashing greatly, moving very strongly, I might trade it. But other than that, no, I don't. All right, so I want to go to my Aussie Yen. All right, so we pulled back to this old level of weekly resistance here. I mentioned this on the weekend. Friday, Monday got support. Could have been buying down there Friday, Monday. And we're starting to move off that level, okay? And the fib that I got drawn in, trend is still up here, high tops and bottoms. Question is, can we find support here for now more of a move up through these monthly resistance levels up here? So the fib that I had drawn in, there it is. It's actually the range for the month, and it's also just the trend range of higher top to higher bottom here, but it's actually the range for the month. So if you know my lesson on the monthly candle, maybe the monthly candle's already formed and we're pulling back to the 79% of the monthly candle to move back up. So on the 4 hour, there's 79, started to get support Friday and into yesterday. We pretty much sat on it yesterday on that level of support, moving up to a structural uptrend on the 4 hour chart. Posted this in the Telegram today that I was expecting maybe a 4 hour dip down, and we popped back up. So today, I was looking at the central pivot and last month's high, but it got a little bit deeper. But you can see after a while, the central pivot in that area became support. Could come down again today for another dip, but structurally, it is starting to hold. It's holding its day trend. It's holding its 4 hour trend. So you just need to look for an opportunity to buy a dip. This is the area I was looking at today, between 96.19 and 96.17. So can it structurally hold that uptrend to move up and test those higher levels of resistance once more and maybe move through? Trends are up. It's just a question of, we did sell off quite heavily from the area of resistance up there. Can it, on a second ago, move up and through? All right, so day trend's up, 4 hour structure's up. You just need to work out for yourself. Do you want to play on that pair and look for your best level? Obviously, if we pull back to the 79% retracement of the monthly candle, this could be now the low to put in the next whole movement up into the high of next month. All right, we've got another, what, probably 7 trading days or so left of this month, but this could be the low. That could be the dip now to move up to the high of next month. So you just need to decide what you want to do. All right. Now, I did touch on the Aussie dollar before. This is my other charts. On a lot of these pairs, this is the range of last week. We had this imbalance. So I'm looking at the potential for this imbalance to get filled. Looking for the potential maybe for price to come up. I've always said this is a 4 hour uptrend structure. It's pulled back approximately already today to 62. I'm potentially looking for this to move up to this area, fill the imbalance, 79% retracement of last week's range. And then what does it do there? Now, of course, when the FOMC data comes out, this could just plow through support down here. But at the moment, we're getting some support down here. Often these imbalances get filled. So there's a number of pairs of these imbalances, which I'll run you through. All right, next pair, the Euro Yen. I might go to my other charts. All right. Now, last week, I was potentially looking at maybe on the 4 hour chart head and shoulders pattern forming this resistance area, but I kind of changed my mind now because we came down to this support area and we kind of held just fractionally above it on for 3 days, touched it one day, and then Thursday, Friday, hovered above it. So I think some buying's been going on just above support there, maybe to push through. But the level to monitor is 144.24. If you drop it down to the 4 hour chart. Last week I was putting out maybe this is the left shoulder. We're going to put a right shoulder in here. There's still the potential for that. I just think this elongated kind of sideways price action before starting to show an uptrend. Maybe accumulation of orders to push through, but the key level to watch is obviously 144.24. So really, to get long for a move through that level, maybe you should have gotten in already by now, but to the 15. You know, if we did pull back today to the central pivot point, which I don't think we'll do, but if you did, that would be a good area to watch for a pullback and maybe an opportunity to trade around. I think that may have already surpassed. Really, a few days ago, probably should have been getting in this pair because then you can get yourself to break even and look for that retest up here of 144.24. So for me at the moment, I'm not in the pair, but I am watching 144.24. We got the 62 level at 144.35. That could be a left shoulder. That could be a head. We could form a right shoulder there. All depends really what comes around on, you know, Thursday. If the euro dollar drops, takes the euro yen with it, we could, you know, before the FOMC statement be around that resistance area, then the euro dollar drops and it could take the euro yen with it. Of course, if the euro dollar screams north, then this will probably go north with it as well. So difficult to take a trade where the patterns is a bit larger, where you need a couple of days or more to collect your profit, because then you're going to have to hold it through the news item. But watch 144.24 to be potential resistance there. All right, getting into, we've done the euro dollar, but the euro dollar, I just want to look at the concept of these price imbalances that occurred last week. This is the euro dollar. This is the range of last week. And we've got this imbalance here. And just to the day chart a moment. I've got daily resistance here at 100.90, monthly resistance at 10118. Now the day chart, let me just get rid of that fib, because the day chart trend here, that's going across last week's candle, but the actual structure here is more of a trend the opposite way. So I'll probably just leave that fib off, although I am monitoring it personally. Is the structure here is up, barriers for the uptrend, 10090 resistance and 10118 monthly resistance. All right. Now on the 4 hour, we have this imbalance where we have this drop and we haven't pulled back and filled it. So higher bottom forming on the daily, 4 hour structure is showing to be up. And I'm expecting that imbalance will get filled. So price will potentially come up and fill the area. Filling the area is going to take you up to 10118 monthly resistance. Can we move above that level and start to want to be above that level? You know, at the moment, we're starting to maybe want to be above the 100 level, but do we see some upside, further upside movement? And can we start to want to be above 101? Then be above 10118 monthly resistance, and you know, can we come up to the last area we really failed over here at the 103.40 area? Okay, are we moving back up to that area? All right, so day chart trend is up, 4 hour trend is up, higher time frames though weekly and monthly are still down. So is this just a very short-term trend that we're seeing to the upside? Or is it more of a change? You know, if the dollar index puts in a lower top, this is putting in a higher bottom. Dollar index puts in a lower top, this is going to help this move up that range. All right, pound yen. Go to my other charts. We pull back, mentioned this on the weekend, pull back today support. I know MACD's down, but it doesn't tell me much when it's range bound. Pull back today support after coming up to top of the weekly range here. Got support at 62 area as well. This looks like now it's moving up to re-challenge top of the range, and can it come up to the higher levels of resistance? All right, structurally that's just in a trend, starting to form a trend within that range. Is it getting ready to break up and move up high? Don't forget, get to the pound dollar in a moment. Pound dollar's on major support, trading above major support at the moment. If there starts to be a lot of short covering on the pound dollar, that's going to help that pound yen move up. Now, for our charts just starting to show, just starting to build an uptrend here, you could be looking for a 4 hour pullback. Using the fib to the 62.79. Just looking for a 4 hour pullback. It's starting to show an uptrend now on the 4 hour. Can you find a pullback on the 4 hour to trade up to the top to at least challenge 166.37 weekly resistance? Okay. All right, pound dollar. Now, just have to clean off. Let's clean that off. I might go to my other charts because I've got them set up with the fib. Here we go. So I just want to look at the weekly. We're on a downtrend, but this low over here is a major monthly low. We've traded below it a couple of times, but that's at 114.09 and we're trading at 114.29 at the moment. We've actually been down to that level twice today, if my memory serves me. So it is acting as support, even though we've been below it. Now, trend is down, but the weekly trend here is, as I've been mentioning, it's beyond the 127 extension. We're at major monthly supports. This is a profit-taking area of the move down. All right. Selling here is just like, for me anyway, it's like chopping my hand off. It's just, this is too, you know, I need it to rally. If this trend is going to continue down longer term for the next 3 or 4 months, I need to sell a rally. And this is at the bottom of the move at the moment. It doesn't make any sense to me to be a seller down here. It's major support as well. We could get a major reversal and a longer term move up if this level of support wants to hold for the long term. It hasn't shown that yet, but just wanted to show you that we are way overextended. The day trend here. So you can see the shadows or the wicks down here when we've been below 114.09. We haven't been able to close below it. All right. And we're above it today. We're having it, we're creating a bottom here and having a day up. And the 4-hour is just starting to form a little bit of an upward structure, higher bottom to a higher top. And there's another imbalance from same kind of imbalance that was shown on the other charts, is these imbalances where we get these big drops often get filled. So this is a range of last week. Using the range of last week's candle, not necessarily going to change the trend of this pair. You know, having a rally within last week's candle doesn't change the overall trend structure, but looking to sell higher up within the candle range of last week would be ideal. Selling down here to me is just too discount, too low. So the 4-hour trend is starting to move up. It's going to sit on top of monthly support. I'll be looking up here for this imbalance to be filled, you know, looking up to the 79% level. What happens up here? Do we hold up here? Does the long-term trend still remain, but can we get up to a higher level, 62 or the 79? 79 ideal for an opportunity to see what happens up there. Trade down, all right. Slav asking me, how do I feel about trading pound yen pairs? Well, there's talk about the BOJ. Might have to intervene. Yeah, I'm a little bit cautious about those as well. I'm cautious about everything at the moment with the interest rates and intervening. So we've got, you know, looking at the calendar for the news. If we go back to it, we just quickly talk about the whole week. We've got obviously the US interest rates. We've got the UK interest rates. We've actually got Swiss interest rates. We've got the Bank of Japan on Thursday as well, monetary press conference. They might say something that will say, we're going to come in and intervene if the price keeps going up. That might just, the fact that they just talk about it might be enough to send the yen pairs moving down. So yeah, I'm very cautious about that. Very cautious about all these events next week at the moment. After last week's data, just need to get rid of, especially the FOMC press conference. You want to trade a yen pair, you know, same day. The BOJ will have done its thing. Well, we've got the FOMC press conference first. We've got the BOJ in the afternoon on Thursday. We've got the UK interest rate late in the, you know, mid to late evening on Thursday. Once we get past that, things are a little bit clearer. But there's lots of risk events at the moment. You need to be aware of them all. And yeah, you're just telling me that you've closed all yours because you're feeling very cautious. So I'm being very cautious as well at the moment. I'm keeping my charts up and my levels. You know, FOMC statement for the pound here and the interest rate, we might pop up to this level. So you need to know where the best levels are. I'm not going to sell it down there for sure. It's too low down. And it's on major historical monthly support. So there's high probability at the moment that there'll be some short covering and this will move up. So looking for a long trade up this range would be more ideal than trying to sell it at the moment. But you have, you know, do you want to be in a trade with all this news coming out? So there's a bit of time to maybe trade up. On the 15-minute chart at the moment, what you'll see intraday is that this 14.09 monthly level. So we came down in Asia to the pip. In London, the buyers came in fractionally earlier and got support at the central pivot. So we could be getting support in this area for moving up today. This, you know, 15-minute fib range here looks like it's pulled back to the 79% there for a move higher intraday. All right. So there's some intraday trades you could look at, but if you want to hold something longer than an intraday, then, you know, buyers or sellers beware with all these news items coming out. So this might offer in this area here a move up today, in line with me saying, of course, that I think we might be moving up to fill this imbalance, but I'm not going to be holding any positions open through the FOMC statement. I'm going to be waiting post to look to trade and For the pound, I'm going to be waiting past their interest rate decision, and hopefully it's up here somewhere. And then I can watch and see what price is doing. New Zealand yen, quick look at this pair. I've just got a fib drawn. Here's a day chart. Let me just take the fib off a moment. We're obviously struggling at the weekly resistance levels. All those lines I've got drawn on weekly resistance levels. But the day chart trend is just holding. And fits very much like the Aussie Yen I was showing you. The fib I've drawn is across the monthly range that's been forming this month. So are we going to not break through this low here? Are we going to hold here and be able to start to move back above that 79% level? All right. For whatever reason at the moment, the New Zealand dollar is the weakest of the bunch. It's moving down to a new low today, whereas the other pairs to the US dollar aren't. So I'm not quite sure why that's so weak, but it's getting close to the 59 level. So maybe it's just wanting to get down to that 59 level. So I'll be watching this to see whether or not it can move back above this 79. You know, if it moves back above the 79, it is going to change that 4-hour back to up. Do we start to, first of all, I want to see a 4-hour structure to start to show an uptrend once more. All right, at the moment, it's not really, you can see where we're moving back to is a whole layer of consolidation here before we moved up. So it wouldn't surprise me one bit for this to pause here, start to get back above that 79, does the structure show a 4-hour uptrend, and then you might see an opportunity to get to the long side after the bodge though. I'm just pausing, slightly saying, I notice that sometimes you can look at the New Zealand as a canary in the mine. I'm not quite sure what you mean by that. I mean, often the New Zealand dollar is very user-friendly with the Aussie dollar. They both go exactly the same way. At the moment, they're not, but we'll just wait and see. We'll get to the New Zealand dollar now. New Zealand dollar is at a very good level of potential support. We do have this imbalance here that we need to fill, move back up after that big drop, but obviously we're not moving up that way at the moment. But I'm very mindful of all these pairs that had a big drop last week. These big drops, see there's a drop here. Price comes back up to fill the imbalance. So we're not doing that at the moment. But in my mind, usually that's what happens. So the further it's going down, I'm not going to sell it where it is. It's getting near the bottom. And as well, when we look at the weekly chart, here's the weekly fib structure, lower top to a lower bottom. We had a ride to 79. We're at the 127 extension, and there's weekly support here. This is where we got started to claim support to move all the way up here after the COVID drop. So we're definitely in an area where support can come in. You know, this is where you want to sell. This is where you want to take profit. All right, so I'm not going to even entertain selling this here. This, in all probability, at some point in the short term, should start to come back up the range. All right, so I'm just monitoring this to maybe, can it bottom out, start to form an upward structure on the 4-hour chart. At the moment, it's clearly not. It's still obviously moving down, but it's definitely at a level where I could expect support to come in. And if we get a 4-hour upward structure, then, you know, even if that's post FOMC, we start to turn around. You know, like I've been showing you all these imbalances, we could well be coming back up to fill these imbalances. Okay. So, but hopefully we can all see that we're at the low end of the moves. You know, that weekly picture here at the moment. Yes, it can come down to the 162 level, but you know, if you're not going to be intraday trading, if you want to hold a trade overnight, you need to have gotten in further up. You know, if you're wanting to trade it intraday at the moment, look for a rally on the 4-hour chart. All right, 4-hour chart at the moment, you would need to draw your fib from the last lower top to where the low comes in, and watch for it to move back up to the 62.79% area. So that's at the lower end of where price will go to at the moment before it has some form of bounce, even if it's just a bounce on the 4-hour chart. Slightly saying last time the Fed lifted interest rates in July, markets reacted very positively to it, so it could go up again. Well, it could do, I don't know. I think last week's move down was very over exaggerated, so we could be, oversold, and I don't know if there's too much more downtime with the news that we're being presented with at the moment, and we could obviously get a rally. So we'll just have to wait and see. At the moment, the New Zealand dollar just wants to keep going down. However, in contrast, what's the Aussie dollar doing? It's, still pretty much holding at the 6,700 level there. It's not putting in a new 4-hour candle low. It is a little bit negative on the candle, but it's not, this is putting in a higher bottom to a higher top on the 4-hour chart, where the New Zealand dollar is still structurally down. So the chalk and cheese at the moment, those two. All right, dollar Canadian. Now we've got CPI dollar coming out this evening. This could potentially, you just go to the day chart. It's in an uptrend here, but the overall fib structure is we're at the extension. It's going to move it to the weekly chart here. There's weekly resistance here at 33.15. There's monthly resistance from over here, a little bit further up at 133.82. We hit weekly resistance yesterday. There's these weekly tops here as well. So we're a little bit high up now on the weekly, getting overextended. Of course, it can keep moving up. Last week, we were potentially looking at this double top in here. I was waiting for this candle low to break, and it never did. But obviously, then we've moved above. Rejected up here yesterday, clear rejection at the 127 extension to weekly resistance. Now, we may only pull back. Well, we've had a day down. We may pull back a little bit more. We're at the 127 extension of this upward move. So if we restructure the fib, we could be seeing a pullback now to the 62 to weekly support here at 130.76. All right. And on the 4-hour, I'm just going to take that fib off. On the 4-hour at the moment, what could happen after we get the CPI data? We're failing at last week's high, failing at weekly resistance. All right. There's a pattern there, left shoulder, head. Coming up from a lower point, are we going to come up to the left shoulder area, last week's high, in between the 62 and the 79? Last week's high is at 133.07. So in that area there, could well see a failure, a little head and shoulder pattern forming for the move down. For the move down, let me draw that fib back in on the daily range. That's a daily range fib. For a move down, maybe to the 62 level, to weekly support at 130.76. And we have this imbalance here that happened when we got the news, imbalance to the upside. So we could be coming down to fill this imbalance as well. All right, so a pattern might form there to further confirm, we had a rejection yesterday on the daily, to further confirm that, okay, maybe we're going to move down because we're overextended. Not saying that we're going to change trend, but a pattern on the 4-hour, see a 4-hour downtrend move within that day chart uptrend and that new fib that I've just drawn. Are we coming down to 62, the weekly support, or do we come in deeper down, start to fill 79% level and fill this imbalance here? All right. Of course, that could blow straight through there when the CPI data comes out, when the FOMC statement comes out, but it's overextended. It's changing its structure for you. It's telling you, I'm changing my structure at the moment. Maybe I want to start to move down. Is it going to put in a lower top there on the 4-hour chart, show your head and shoulders so you can monitor that? All right, we've already discussed the BOJ. And this dollar yen, this is the weekly look. It's overextended at the moment. Just go to my other charts, my charts on this. I think I've got a few more resistance levels drawn in from the monthly chart. And I'm drawing a line in here because this is a top up here. 144.99 is that weekly top up here. So struggling at 145 approximately. On the weekly chart here, we're at the 127 extension of this move up, correction, further move up. So I'm anticipating that we're going to maybe have a weekly pullback, just like we did here, maybe. All right, we're a little bit overextended now. This 79% level is from way back in time. I'm just re-squashing it. I've got that high down to the major low, the 79% level. So I was just putting that in there to see whether I came up with something similar to the 79% level on the dollar index. And we're getting close to this considerable major top here at 147.68, but 145 at the moment seems to be holding. Obviously, the bodge is looking at 145 and going, oh, this is getting expensive. Maybe if we just talk about intervening, that might be enough. Or maybe we have to intervene, we'll have to wait and see. All right. Maybe the FOMC statement might, whatever comes from the FOMC statement might be enough to give a corrective measure for the US dollar. We'll have to wait and see. But at the moment, great area if you've been in a long position for a while to take profit. It's not a great area to get in though, because we're at the profit taking end of the fib and the move up within that structure. Okay, so I'm anticipating that maybe that is the high for a retracement now, maybe to the 62% level. 135.57 is a area of old resistance here. But, we need to see what the bodge does. Do they come out and say something, do something? MACD's crossing down there, you can see. So it's in a topping out phase maybe there at the moment. But until we get past the FOMC and the bodge this week, then we'll probably get a clear picture after that. On the 4-hour chart, what you're going to see is that this is just very sideways. Very sideways. It's just holding its uptrend just. But maybe that's as high as it's going to go, and then it's just going to drift back down within that 4-hour range area there at the moment. Cameron, what is the bodge? The Bank of Japan. My short, if you go to the, there we go, the bodge press conference. That's where I'm getting the bodge from, Bank of Japan, okay? My short-term phrase. All right, so they're coming out with their monetary policy statement on Thursday afternoon, after the FOMC statement in our early Thursday morning. Okay. All right. So very sideways. So we're just going to have to wait. But structurally, we're maybe at the end of the weekly move there, and we could be looking for a retracement down. Just have to wait for price action to start to confirm. And gold, very top topic at the moment. We have broken below this monthly support level. I did a video review today saying, are we going to hold below that? Or are we going to false break it? At the moment, the last 2 days have been positive, but the last 3 days have all closed below that level. All right, so in the 4-hour, it's high bottom, putting a fractional lower top there. So resistance, there's 2 monthly lows in the area that we've broken below, 1676, 1678. That is holding as resistance at the moment. All right, but the market knows this is clear major support that we're trying to break below. If we, see any US dollar weakness from the Fed, we'll probably pop back above here. If the pairs to the US dollar, some of them are a little bit buoyant. If they continue moving up, we may well see this want to get above this level. So this is a critical level to watch. All right, if you wanted to trade down from resistance, you've missed the boat. You should have been looking to trade down from resistance for 3 or 4 candles ago. So yes, so there's an opportunity to trade down there if that was your frame of mind. I was thinking, because there was a potential inverse head and shoulder here, that this was potentially, and it could still do it today, was going to move beyond like so. Within, that's an inverse head and shoulders up to this 127 area there, and put in an uptrend on the 4-hour, but resistance is held at the moment. So the market is wanting to hold below that level, but when we're dealing with major levels here, and it's been showing on the pound dollar, we've been below the major monthly support level, but we're back above it. Is, large institutions, large traders all know that's major support there. All right, now of course we could be having a long-term decline, but if we're going to have a long-term decline, what I like to do with these levels is see a much deeper move below. All right, so that we know we're clear and we're beyond that level for sure, because at the moment I'm not sure that we're beyond that level. Short term we're holding in it, but some positive gold news will simply see a short covering. So Slavia, you said you jumped on gold this morning, you've already covered your position. So this could be oversold. We could see some short covering and move back above that level. So for me at the moment, if on the weekly chart, if this is a major break, there's going to be plenty of time to get short. There's going to be plenty of time to see the weekly structure certainly confirm. We're moving down on the weekly chart from a lower top, but can we get a nice move below? Then do we get, for example, a couple of weeks of rally that wants to top there, put in a lower top, and you would create a weekly structure that you can see is going to hold below that level. At the moment, we're having 2 or 3 days below that level. To me, that's not enough for me to go, okay, I'm going to load my boat and hold a position now for the next couple of weeks. I think this could pop back up, but at the moment, the 4-hour chart, clearly that level's holding. So, that is the clear line in the sun for the buyers and sellers. 116.76 to 116.78 is holding as resistance at the moment. But if you're short and price starts to be above that level, we close back above that level on the day chart. You need to be cautious if you're holding a short position from a higher place further up. I just want to have a look at the weekly chart. Just so we can see it structurally from the fib. There's a little bit of movement left down to 127 extension, but clearly the better, if you're going to hold a trade for days, up here is the clear area to be the buyer. Down here is the clear area to be the seller. All right. And if I showed that 100 people that understood the fib tool, they'd all say the same. All right. So a lot of the market will be looking at this going, how long can this move down before it's going to go back up? All right. So sellers beware. Of course, if you keep seeing structure that tells you that you can get an intraday trade, great. But from a high time perspective, it's just sellers beware. We could see some short covering, all right, in that area, but still going down. All right, let's just click through and see what's been happening while I've been talking. While the chart's up. All right. Market's not really wanting to commit too much either way at the moment, especially down the Aussie Yen. It's had some positivity for the day. It's back to the central pivot. Aussie, it's wanting a deeper move down. Couldn't hold at the figure. It may well come back down to weekly support at 66.81. All right, we've got the 79% fib there, the 4-hour, 66.88. Euro Yen, it's having a tough battle at 144 at the moment, but I would be just holding out to see what it wants to do at 144.24. If you can get up to those triple tops, maybe it's not going to get to those triple tops. Maybe 144 is calling the top there, but I would be hanging out for a retest of that area. Euro dollar is having another little sniff down here at parity. Maybe it's coming into 62, 99.98. Let's look at the pound dollar. Coming back down to the 114.09 monthly level of support. I mean, if you thought monthly level of support is going to hold now, it's going to hold through FOMC, and this is a major monthly level of support for the long-term move up. This is your time to buy because you're at that major monthly level of support here. Okay. And depending on your risk profile, you know, you could take a trade there with a 100 pip stop, very low risk profile. Of course, you could be wrong when the FOMC statement comes out, but if you're only risking like 0.5% in your account, low risk, and this wants to move up. Let me just go to my other chart for the pound, just to show you how you can trade, you know, if you want to trade very limited risk. I think I covered this before, but for those that maybe weren't with me when I covered it, we've had a very large move down this year on the pound, and we're down to major support. This is the monthly chart. We're down to this major monthly level of support here. When we came up to major resistance, we held, and we've traded all the way down to monthly support. Well, how do we know that monthly support won't now hold? To trade all the way back up to major resistance and stay in a long-term range. How do we know that that's not going to happen? Or, just move to my weekly chart, we're just going to simply trade back up inside the range that we've been creating for the year at the moment for a further move down next year. Because last year's range, I'll get my fib, last year's range was here. High to low, we retrace 50%. This whole move here is the current year. All right. So maybe the long-term trend isn't going to change down there, but we could trade back up inside the range that we created for the year at the moment, for the last 9 months. All right. Let's say we do the same as we did last year. We created the range for the year, we retrace 50%. Maybe this is where I've got the fib drawn now is the current range for the year. Maybe we will retrace 50% of the current range for the year because we're on major support before wanting to then move down through this level of support. All right. If that scenario comes to effect, then 50% is at 125.52 and we're at 114. So there's 1100 pips there. So if you risked 0.5% of your account, that would be, you know, if you just got that reversal, that would be about a 6.5% return on your account, creating a trade with very limited risk. All right. Now you might want to wait till past the FOMC, so you can maybe structure something with a slightly higher risk profile, slightly shorter stop. And that's fine too. I'm just showing you there how you could, if you want to take a long-term positional ploy here that you think support's coming in, where could it run? One of the things I've noticed, I'm going to do a webinar on imbalances next month, but this move down that we've been having all year, we have an imbalance where we haven't traded back into the area. Pretty much there. We dropped below 130 and dropped for a couple of candles. So there's an area there where we haven't moved back to, and the start of that imbalance is about 128 approximately. All right. And often the imbalances get filled. So there's an imbalance there that we haven't filled. All right. So you know, it wouldn't surprise me for us to get support here and come all the way back up and fill this imbalance here, which is a long way up. And where would that be with my yearly range? Well, start of it is around about the 62% level here. Okay. So I don't know if that's going to happen, but if we start to see a weekly, we don't have to trade down here at 114. If we start to see a nice weekly uptrend starting to form, there's every chance that we could be moving up to the 50% level here, coming up to fill that imbalance. And you're going to be going, this isn't a major downtrend, Duncan. There's no way it's going to do that. When price was up here, you would have said to me, this isn't a major uptrend, right? And it's been down ever since. All right. So anything's possible when you're at a major level of support or resistance. So I don't know whether this was when the war happened. All I know is we had a big drop and we haven't been back to that level since. But often we do come back to levels that we, you know, do drop down. So time will tell. There's definitely that imbalance there. So we could well want to be moving up. You know, looking at this at a long-term structure, as I was just showing you, we could be, you know, I've heard calls that we're going to parity on the pound, but it doesn't say that we're going to parity this year. We, you know, this could be the candle of the year for the year. All right, same deal. I'll show you how I do it with a monthly candle. This could be the yearly candle. We could then want to trade up to put in the high of next year, up at the 62% level. So, you know, we start to trade up. All right, early next year, we might be put up at the 62, you know, first quarter of next year, we're up here, the 62 level of last year's range. And then, you know, we top out up there and then we move down through the course of next year. But even looking at things structurally like that, that only gets, you know, if that was to happen, that only gets us down to like 107. And I've heard some calls that are going to parity. So this needs to do a lot to get to parity at the moment in my mind, because we're way overextended for the yearly candle range. We're at major monthly support. In my mind, you know, we could have a corrective measure up before then obviously further moving down longer term, we could, you know. So, you know, that's the range for last year. We moved up to the 50%. That's the kind of range at the moment. You know, we're going to do the same sort of thing. Don't know whether we will or we won't. So the same thing happened though. How are we going with time? I'll show you one more on the Aussie dollar. So the same sort of thing happened on the Aussie this year. Right? Go to the weekly chart. So that was the high of 2021. Down to that low there. Look at that as the yearly candle. All right. We then rallied. Everybody thought when we're up here, we're going way higher. We come to the 62% retracement of the yearly candle. And now, you know, we're near the low of the year. So that range, you know, maybe there's, you know, if we put in a similar down candle to last year, we're almost at the low of the year. That measurement there, we put in a similar candle, that comes in down at 66.25. All right. So, you know, for me, we're in the latter part of the candle for the year, and we could well be moving up. Maybe we are going to hold at this fairly major level of monthly support at 66.71 at the moment. All right. So Same thing I showed you on the pound there. It happened exactly, very similar on the Aussie earlier in the year. And on the day chart, the area was this area up here where everybody was going, hey, we're going higher, higher, higher. But then obviously, of course, we didn't go any higher after that. And we've been down for the rest of the year. Slav, just reading what you're saying. Right, you're saying it's hard to see the pound moving up, but when we were at the top there on the pound, he would have said it was hard for the pound to move down. It's just a psychological thing of, you think it's going to keep going down forever, but the market moves in ranges. It respects major support and resistance. I'm not saying that we're going to get a major change in trend. We could move through on the pound through that monthly level, down here for sure. We could. The market can do anything it wants, but I've shown, when we came up to major resistance, we held. Are we going to hold at major support down here? It wouldn't surprise me one bit to see that major support hold, because that's what the market does. But I know the environment, the political environment and everything else that's going on at the moment, we could move down and through. But just trying to show you that there are reasons why we could hold there from a technical perspective. But of course, we need a clear signal to go, okay, I'm seeing a clear signal that's telling me I want to take a trade. And, whilst we've been talking on the pound, a little bit of support, it does not want to go below 114.09 today. All right. Of course, you're all traders, you've got to make your own decisions. I'm just telling you, we're holding at monthly support here. Is it holding for a longer term move up or not? Everybody has to make their own decision about whether they want to trade that level or not, or are we going to be moving lower? Time will tell. All right, everybody, just to give you a heads up what's coming up tomorrow. I've got a new webinar that I haven't done before. If you'd like to be more positional, let me just find it. We're going to be looking at the 4-hour trade entry, looking at the 4-hour charts, where you only have to monitor charts on a 4-hour chart. You get one candle every, 4 hours? Wasn't too hard to work out, was it, on a 4-hour chart? Every 4 hours you get a new candle, 6 candles in a day. And we're probably asleep for 2 of the candles, so you only have to look at the charts 4 times a day to make a decision about trading the 4-hour chart. So I'm going to show you how you can do that. That's coming up tomorrow, 7 p.m. And then on Thursday, more live market. Now, Thursday, we'll have gotten past the FOMC and the BOJ. So hopefully the trends are starting to be a little more clear about what we can do around the levels. All right, and what levels are holding or not holding, and which way price is wanting to move maybe for the rest of the month. All right, so that's what's coming up. So if you want to come to tomorrow's webinar on the 4-hour trade entry, simply register your interest and I'll see you then. All right, everybody, thanks for the questions. Hopefully you got some levels that you can work with. And just be aware of all those, go to Forex Factory, forexfactory.com, review the news items in your time zone. These are my time zone, but in your time zone, so you know what the times are. You know where these major risk events are coming this week. Predominantly Thursday is the risk day, FOMC statement, Japanese yen BOJ press conference, UK interest rate decision, same day Swiss franc interest rate decision. So Thursday is going to be fireworks, I'm sure, on a lot of pairs. All right, everybody, thanks very much. And if you've got the time, we'll look forward to seeing you tomorrow.